Bob decided to come here to see you today. As you know, I am an Army veteran.
Yes, sir.
And I deal with a lot of veterans on the real estate market. And many of them asking me a lot of questions. And today I decided to come and see the man and ask you a lot of questions that have to do with VA loans. Okay, so I'm gonna start with a difficult one. The question that I have for you is, can a widow of a fallen soldier use the entitlements of a VA loan?
That's a great question. So, yes, they can. Okay, a couple stipulations. One, they cannot be remarried. Okay, there's three basically ways that they can qualify. So, if they've survived a spouse that has died in service, they have survived a spouse that was missing in action, MIA, or a prisoner of war. They have the ability to do that. And if they've survived a spouse that was rated continuously disabled, right, and that they were eligible to receive benefits, compensation benefits.
Okay.
If those are the three things that have triggered it and they have not been previously remarried, then they have the ability to access the veteran's eligibility.
Okay, so let me ask you about the funding fee. For those widows, they lost their loved ones in combat. Is the funding fee waived for them?
Yeah, funding fee is waived. Yes.
Okay.
The funding fee is waived. So that I mean, you know, that could be anywhere between, if it's the first time usage, 2.15%, or if it's a second or subsequent use, that's like 3.3%. So, I mean, it could be a lot of money. I mean, on a $100,000 house, that could be $3,300 that they save on the funding fee.
Well, let me ask you a more generic question, and this is for all the veterans that serve in the armed forces. When they want to apply for a VA loan, what actually is the process to apply for a VA loan?
Okay, so the process to apply is not going to be too different than the process for anyone else applying for a loan, like if they're going to FHA, you know, conventional USDA. We still have to gather the information from the veteran or the surviving spouse, right? So we have to build their profile, where they've lived for the last 2 years. We have to look at their current income, their assets. We do have to look at that. We have to look at credit as well. Now, that is the same for VA as it is for all the other ones. What's going to be different about the VA is the certificate of eligibility and what's called a DD-214. Exactly. So that DD-214 is the document that tells us their branch of service, if they were honorably or dishonorably discharged. The veteran will provide that to us, or the surviving spouse will provide that to us, and then we have to go get the veteran's certificate of eligibility. And we will do that for the veteran, okay? And we'll figure out, okay, how much eligibility does the veteran or surviving spouse have access to? And that's going to be the biggest difference in the application process. And it's really important because we want to know what that eligibility is during the pre-approval process.
Yeah, exactly.
Because that will determine whether or not they truly are pre-approved. Unfortunately, I have seen lenders issue pre-approvals before they've gotten the eligibility back, and then come to find out they didn't have that eligibility or enough eligibility remaining, and so that pre-approval wasn't valid. We do that in the very, very beginning before we issue the pre-approval, before we allow the veteran or surviving spouse to go under contract.
But you just trigger other questions in terms of the certificate of eligibility.
Right.
So I know now that the lender is the one that applied for that.
Yes.
It's just the customer, the client, has to bring the DD-214 to you. So how much house can I buy with a certificate of eligibility? How much is my max?
Okay, so the eligibility is interesting because it's $36,000. The basic entitlement eligibility for a veteran is $36,000. Now they tell you that you apply that times 4, and then you get what the potential eligibility is going to be for that $36,000, which would be $144,000. And if you bought a $144,000 home, then you would only use $36,000 of eligibility. But the reality is, VA will allow you to go up to $484,350 in this area. So the way they calculate that, since it's above the 144, number,
Uh-huh.
they will take 484,350 times 25%. Okay, and that is what the maximum potential eligibility is that the veteran has for no money down. Okay,
Exactly.
so that's like $121,000, right? So we just have to determine, okay, what's the sales price that they're going after, and then if it's over 144, so let's say it's 300,000, we would take 300,000 times 25%. That'd be $75,000. That's what we're really using of the veteran's eligibility of the maximum potential of the 121.